Yesterday, though, we saw a surprise increase to monthly inflation, up 4% from 3.6% in April, and it's fuelled fears of a rate rise when the Reserve Bank next meets. Now, that'd be a major political blow for the Labor government as they continue to sell their cost of living measures outlined in last month's budget. Let's bring in the best journalist in the financial game we have, Sky News Business Editor Ross Greenwood. Well, Ross, we know inflation's a global issue, so let's put yesterday's increase into a bit of context. Where's Australia placed in the world economy, and do you think the hike we've seen is going to trigger a rate rise?
Well, you can see it right here, and that is that global inflation is broadly coming down very sharply. And that's because the rest of the world did something that we here in Australia didn't necessarily do. They went harder on interest rates than what we didn't here in Australia. Here, the plan was to try and glide the inflation rate down over time, to try and preserve as many jobs as possibly could be done. And that is a noble ambition, I've got to say, because a person, at least with a job, can try and cut back. A person without a job has got nowhere to turn. So it's a noble ambition. But the reality is, Peter, it's never been tried really successfully anywhere in the world. So even in the United States, where they have gone harder and their inflation is also proving to be sticky, it really is a situation where, their economy right now, they're looking at interest rate cuts. Here in Australia, after that inflation number came out yesterday, the market odds of a rate rise in August when the Reserve Bank next meets rose from 11%, and tonight, as I just go to air, is sitting at 41%. So it's not a fait accompli that rates will rise in August, but it certainly says that the market has turned its attention to say that the Reserve Bank will be actively looking to raise rates right now. And remember that goes against the global trend where in almost every other developed economy right now, interest rate cuts have either happened or are being actively considered.
Go back to the start of the year. I mean, you and I were talking about what it might look like for rates this year. And it was absolutely on the cards that there would be very little increase at all. In fact, we were looking to see cuts, particularly going into the end of the year. And we thought, politically, the timing then would be positive for the government to go down the path now. We're not far from a federal election where we're not just talking about rates on hold, we're talking about rate hikes. That's deadly.
So you're right, and the government was looking for nirvana. Effectively, what they were looking for was cost of living relief out of the budget, which they've announced. They were looking for the tax cuts, the revised tax cuts, where everybody got a tax cut, not just those on the top end. And on top of that also, that they would be looking at interest rate cuts. So in other words, we're the government who gave you the relief, we're the government who gave you the tax cuts, we're the government who gave you these interest rate cuts. And then everybody would still, presumably, in their ideal world, have a job. But the reality is now that there'll be no interest rate cuts between now and most likely the election. It is highly likely by the time we get to an election, unemployment is rising and rising sharply, and it could well be that we have interest rate increases as well. And then if you consider that there's around $25 billion worth of those revised stage 3 tax cuts that are likely to be handed out. So that's $25 billion, not over in totality, $25 billion in the first year. It's the best part of $108 billion in total over the next 4 years that's going into people's pockets. Now, people might need that money. They might feel they need that money, but the reality is that when they get that money, because of the cost of living pressures, they're likely to spend it. And so what will that do? Well, those companies that pick it up, it doesn't matter whether it's your insurance company or whether it's the landlord that you've got, whether it's indeed the supermarket that you go to, the natural reaction will be to raise those prices. And especially if another interest rate rise comes, then their costs will be rising, so they will be under pressure to raise their own prices. So the spiral of inflation that we were fearing could very well be coming to fruition.
What you've just explained there for people at home, Ross, is textbook economics 101 about spiking inflation. And the government was at pains, Prime Minister and Treasurer were at pains to say if they put this money, this relief, these handouts in the budget, they would not be inflationary. Well, that's exactly what they're likely to be, and they come at the worst possible time.
Well, the reason for that is because the way in which the cost of living relief in terms of energy bills is devised, so that is $300 going to everybody's pocket, which of course negates a pre-election advertisement that the coalition would have put out saying they promised to cut your energy bills by, $280 or whatever it was, and here we go. Well, there's the ad. Well, they negated that ad, but what that also would do is knock down headline inflation, because energy prices obviously are a part of the inflation basket, and so therefore they take it off the headline rate. But the Reserve Bank looks through that. It looks to the underlying inflation, the trim mean. And even if you go to the number that came out yesterday in these monthly numbers, which do bounce around a bit, admittedly, but
they do bounce around. I agree.
Yeah, and to rise from 4.1 to 4.4%. That was what was alarming, and that's what certainly would cause concern at the Reserve Bank as it sits down and just mulls what its next move will have to be.
What about that stinging rebuke today from the Victorian Chamber of Commerce? They put out a policy paper. They say it's not just Victoria's energy policy being a problem for Victoria, but they're saying it's putting the whole eastern seaboard's prosperity and its energy grid at risk. They say, there's big problems in Victoria, land tax hikes, energy efficiency standards that are sending landlords to exit the market, sell their houses, and that businesses are exiting the state at a record pace, not to mention, of course, Victoria's horrific state debt. I mean, Victoria is the canary in the coal mine. Yes, it is one state, but it is was a significant economic player to the national economy. Who the hell would invest in Victoria at the moment?
Well, this is an alarming situation for Australia. State debt rising, not just in Victoria, but New South Wales, Queensland in particular as well, is of growing concern to the credit ratings agencies, because it's not just the federal government's debt that's rising and will continue to rise. Remember, there is no surplus forecast for the next decade in the federal government's budget. And so this rising debt really puts a big question mark over Australia's AAA credit rating going forward. But then you go to Victoria and even to the whole of Australia, and that is about competitiveness. We talk sometimes about productivity, and if we had more productivity, there'd be less pressure to raise interest rates in Australia. But the reality is, because we haven't explored for enough onshore gas, because we are not competitive enough when it comes to wages, the reality is that businesses right now can move their capital to other parts of the world. And if you find that energy prices in the United States are a third of what they are in Australia, and you've got a big aluminium plant or a steel plant, or you're considering doing something in parts of the world, this is a very safe place, a very good place historically to invest. Well, the reality is, if you make more money somewhere else, you'll take the chance to go somewhere else and try and make that money and not create the jobs here. And that's why, in time, we could have a significant growing unemployment rate, particularly in productive areas of our economy. Now, not to decry people who work as civil servants or public servants or work in the health sector or work in education, but those wages are going up fast. And the reality is, yes, they create a better society, but they're not making things that we actually need in the long term to make our economy be driven forward. And the reality also is, as a result, more employees are coming under the government's control and less are coming under private enterprises' control. And that also is a danger when it comes to wages outcome, therefore inflation, therefore your future interest rates.
You're the economic analyst, I'm the political analyst, but that's been the left's long-held desire to have more and more people working for and dependent on the state, and that's exactly where we're headed, I'm afraid to say. Ross Greenwood, thank you.